Most people think being rich in America means yachts, mansions, or seven-figure net worths. But here's a reality check that messes with your head. If you have more than a few $1,000s sitting in your bank account right now, you're already ahead of millions of people. Not because you're winning, but because so many people are losing. In this video, we're going to peel back the headlines, ignore the stock market hype, and look at what's actually happening inside the average American household in 2026. And once you see the numbers, you'll understand why so many people feel broke, even when the economy says they shouldn't. On paper, things look fine. The stock market is near record highs, unemployment is relatively low, inflation has cooled. But here's the disconnect. A majority of Americans are living one paycheck away from financial trouble. Not just low-income workers, not just students. We're talking engineers, managers, professionals, people with respectable salaries who still hit zero before the next paycheck arrives. Money comes in and then disappears into rent, car payments, insurance, groceries, and bills that cost way more than they did just a few years ago. This isn't about budgeting mistakes. It's about math that no longer works. Let's talk about liquid money, cash people can actually access. A shocking number of households have little to nothing set aside for emergencies. No buffer, no cushion, no room for error. One unexpected car repair, one medical issue, one job interruption, and suddenly everything collapses. Not because people were reckless, but because there was nothing left to save after covering the basics. Even long-term planning has taken a backseat. More than half of households don't have meaningful retirement savings at all. Not because they don't care about the future, but because surviving the present consumes everything. You've probably heard that inflation is under control now. That's technically true, but deeply misleading. Prices didn't come back down, they locked in. Daily life now costs dramatically more than it did just a few years ago. Food, rent, insurance, utilities, all permanently higher. Wages didn't rise at the same pace. Most people saw modest increases that didn't come close to covering the gap. So even if you earn more than you did before, your money buys less. That's why people feel like they're running harder just to stay in place. Here's where the divide becomes obvious. If you own assets, stocks, real estate, retirement accounts, the last few years probably treated you well on paper. Your net worth went up. But if you rely mostly on wages, if your income comes from trading time for money, you're likely falling behind. This is the split economy. One side benefits from rising asset values, the other absorbs rising costs, and most people are stuck on the wrong side of that split. Ask Americans what it takes to feel financially secure, and the numbers are staggering. The idea of retirement now feels distant, fragile, and expensive. Many people believe they'd need well over $1 million saved just to stop working without fear. But when you look at what people actually have saved, especially when you focus on the middle, not the ultra-wealthy, the gap is enormous. The average numbers you hear are distorted by outliers. A small group with massive savings pulls the average up, masking how little most people actually have. The median, the true middle, tells a much harsher story. Ask Americans what it takes to feel financially secure, and the numbers are staggering. The idea of retirement now feels distant, fragile, and expensive. Many people believe they'd need well over $1 million saved just to stop working without fear. But when you look at what people actually have saved, especially when you focus on the middle, not the ultra-wealthy, the gap is enormous. The average numbers you hear are distorted by outliers. A small group with massive savings pulls the average up, masking how little most people actually have. The median, the true middle, tells a much harsher story. The personal savings rate is historically low, not because people suddenly stopped caring, but because there's nothing left to save. Housing absorbs a massive share of income, whether you rent or own. Renters face rising monthly costs with no equity to show for it. Homeowners who bought recently are locked into expensive payments. Those who bought earlier may look wealthy on paper, but still feel cash-strapped. It's possible to be asset-rich and cash-poor at the same time. That's the contradiction people are living with every day. Here's the part no chart will tell you. Comparing yourself to averages is a trap. They're inflated, they're distorted, and they're not a useful measuring stick. What matters is margin, the difference between what you earn and what you spend. Even a small gap is powerful. That gap becomes your emergency fund, your flexibility, your escape from paycheck to paycheck living. It won't happen fast, but staying stuck guarantees nothing changes. The numbers don't lie, but they don't define you either. The system is tighter, the costs are higher, the pressure is real. But progress doesn't come from panic or comparison. It comes from protecting your margin, shrinking your liabilities, and building stability step by step. You're not racing anyone else. You're building your own exit, and that fight is worth taking seriously.